Hi everyone, I hope you're doing well. In this video, I just want to go over a little bit of a tip that has helped me in trading when it comes to taking high quality trades. In my trading career, I've seen that I've had issues with remembering what good price action looks like. And when you're caught up in the moment or in the weeks, the market's going through certain transitions or phases, it's consolidating, etc. The price action can get a little bit choppy, it can get a little bit overlappy, and it's not so clean. But because you're so in the moment, you're trading for a week straight, you're trading for 2 weeks straight, you don't really take a break the entire month, you kind of forget what high quality trades look like or high quality setups look like. That's a problem that I've experienced myself till this very day. You get in the moment, you're in the zone, but the quality of the price action is just not that great. You think it's an opening range breakout, but it might just fake you out. You think it's a buy setup going long, but it's not the best quality buy setup. It hasn't taken enough rest, etc. So I found that if I want to remember what high quality trades really look like, having a cheat sheet has been really, really helpful. And in this video, I can share a little bit about my cheat sheet. So I trade on the 2-minute time frame. Before we go over the cheat sheet, I kind of want to show you what I mean by not the best price action. So this was September 8th, 2025, just yesterday. And the market, QQQ to be specific, gapped up. And it was kind of between the higher range of the prior day and kind of like the mid range. At the time, I didn't know what the exact candlestick will look like, but because it was inside the previous day, I kind of had an idea that this might be an inside day. We're just going to look at that range, and if we break the high of prior day, maybe we could go higher. But especially because it's a red candle where it closed here, buyers stepped up and gapped up, it still might experience some pressure, and that was my hypothesis. But overall, I was still long biased on the week, as you can see in my notes here. But the price action on QQQ was, not the cleanest. It was moving up and then having sharp pullbacks, moving up again with this, sort of turnaround bar, and then kind of just lackluster again, moving back up, pulling back. So it was just kind of consolidating and moving between a range of 578.50 up to like about 580.50, about a $1 to $2 range, but not so clean. So in the moment, if you see this often, you become normalized by it. So I found that the single best way for me to remember what the charts look like is to have a cheat sheet of the best charts that I could possibly find in the moment over the last year, 6 months, and place them on a cheat sheet. So this is my cheat sheet. It's available for me right away when I want to see what's happening on the market. I just switch between my execution screen and go straight to the cheat sheet. I use just 2 screens to trade. This has been the most minimalist setup. It's worked really well for me. It allows me to be flexible. I can travel anywhere and still trade. So having 2 screens is a pro, but it can also be a limitation unless you can sort of think outside the box. And ever since I started using these desktop features, it's like having as many screens as I need. So on the second screen, I have a full screen of this layout that I have made with all the different setups that I can potentially look to see and trade on the market. As you can see, I prepared this when I was trading on Thinkorswim. I'm no longer using Thinkorswim. I'm just using Webull for my charting. But it's pretty obvious. It's about, having all of the information about the different patterns you like to trade, or the different patterns where you're like, hey, if I see this, it's a good thing. It means that I'm able to take a bias on a specific direction and take the trade. It might not be something you see every day, but it's, for example, like a topping tail, or sorry, tweezer top, I think is referring to as TT. When I see this, it's rejecting a whole number, what does it say here? 385. Can't actually read that. 365. It's a little bit smaller, but the point is, it's like a whole number. Yeah, and then I would take the setup short. So having these sort of past trades and also noting down, you know, like these overlap chopping areas, it's really helped me really figure out in the moment, am I seeing the best charts? Is this what I really see here? You know, sometimes I'll have it open here and just look at all the 2-minute charts on the left-hand side that I have of my watch list and go, hey, I think I see a buy setup. Oh, look, this is like that breakout that's forming. It's kind of the same way in the pre-market. And then I switch back and then I can have the full chart available to me and still refine it. In fact, I have this same cheat sheet available on my left screen as well, in case I'm interested in looking at the execution and I just want to see, am I seeing something here on the execution side that matches this? Over time, you get better at identifying the different parameters and criteria you need for each type of setup. Like a buy setup needs about a 50% retracement, give or take. It needs to be on some sort of support level. So like this is a pre-market high level. It has to be above the 20 moving average. It has to have some sort of like consolidation, sort of like doji bar, and then it triggers. You can set your stop loss below here or below the low of the day. Is it an expansion bar that you're expecting? So is this going to be a whole green candle on the daily? You know, it's also happening at a 50-cent level. Is it happening at a whole number? So I've basically set this up so it gives me the best type of setups that I'm looking for, the different entries I can have, what happened in this trade, which signaled a bounce. Sometimes there's these 45-degree trades that I see. I've kind of just kept it that name just because it's like a 45-degree angle. It just keeps bouncing off a trend line. It keeps bouncing off this 20 moving average. And maybe if I see this again, I think it happened recently with Google. Let me just check that actually. I remember seeing something like that on Google very recently. Yes. It happened 2 days in a row, I think. It happened just on the 8th. Yeah, so like this 45-degree angle just keeps bouncing. You can set a trend line. You can look at the 20 moving average. And if I'm not mistaken, it also happened just the other day. Yeah. Yes. So again, this chart here. So if I'm like, oh, this looks like a, you know, like a breakout opening range break, a flag, whatever you want to call it. It's kind of a little wiki on that. But it bounced off 233. And I'm like, hey, that kind of looks like this trade right here. And then I'd start, you know, finding the criteria like, hey, I like that it did this, I didn't like this, and I sort of add and weigh the different pros and cons. And then if I can do that really quickly, I can basically enter the trade and write it. And this was very similar. I don't know if you can see, but it eventually stops you out. But it looks very close to, where is the 45-degree one? Right here. So overall, I have these setups. I also have it for the short side. I wrote, be patient because this is choppy. Some people might step away at this time, be like, hey, look, I'm done for the day. This is not really happening. This is the first, what is this? 30 minutes of market open. So we got a 10 a.m. reversal happening. You know, so putting all these concepts together, you know, that I've learned throughout my trading career so far, it's really, really helpful. And I highly recommend considering doing that for anyone that's struggling with remembering what charts look like, remembering what high quality setups look like. And these aren't the best setups, but it's just enough to give me a reminder, right? Like for example, one of the biggest problems that I had with short setups was, hey, I got the bottom right here. I think this is going to go long now. For some reason, I think it's going to go long and break the high day. Of course, that's not a sound hypothesis because A, it's moved quite a bit. Maybe this is like 60% of the average trading range for that day. It's clearly a red candle. Why do you think it's going to go all the way back up? But at the time, I would think, oh, you know what? Let me catch the bottom and ride this thing. I found the bottom. And instead of, I should be thinking, hey, look, this might bounce, but the probability is not in my favor. It's more likely going to go further down. So do I want to do two things? Do I want to wait for a break of low a day? Do I want to wait for a pullback and take the next break of the low a day? Which one is it going to be? Where am I going to set my stop loss? Or do I want to basically catch the bottom, but don't have an expectation beyond just the moving average? And look at exactly it does that. So by having simple charts available to me, consistently reminding myself, hey, look, this is not ready yet. It's still bearish, you know. look right off the open within the first 2, 4, 6, within the first 5 to 7 minutes, this thing is breaking down. Don't think it's going to go long, because I had this problem where I would catch the bottom, or I might short the top, like in this opening break. Oh, look, it's a turnaround bar. Let me go short. But then there's 2 bottoming tails here. So improving my technical analysis skills, improving my analysis skills, improving my ability to critically think and weigh the odds out in my favor. You know, if I see anything wrong in a trade, I won't take it. Okay, this is a pullback. It's a great buy setup. It might get tagged. It's concerning that it broke the 20 moving average. Let me just wait. There's an entry here. Maybe I can add to this trade and raise my stop loss. Hey, look, it's at a whole number. And what's interesting is at the time I was just trading QQQ. So all of these charts are QQQ. For some reason, I think QQQ provides probably the best trading charts on a average, weekly basis. And I think it has something to do with the fact that all of the major tickers that it follows or has it incorporated as part of the NASDAQ 100 are the stocks that I typically trade. They're active, volatile, such as NVIDIA, what is this here? Meta, Microsoft, Apple, Amazon, I believe Tesla, but whatever. All these stocks here are reflective of NASDAQ. So I was just trading the NASDAQ, and the premiums move very well. You can get a premium for $1 same day, and it can move 40 cents, 30 cents, no problem. And it's really good spread wise. So I have this all set up based on QQQ. It's just a coincidence. It would have been good to have a version for all the different stocks, because all the different stocks have personalities. But overall, I think you're getting the point here with having a cheat sheet. In school, you learn not to have a reference. Maybe in university, or if you go to do extended studies, you're going to have those references, but generally you're discouraged. I remember at the time when I was really young, you're discouraged from having a calculator. I'm not good at using calculating things really quickly in my head. Maybe I'll do the calculations and learn it and practice it, but give me a calculator. It's just the wrong way of thinking. If you have assistive tools, and we're in the age of AI now, use them to your advantage. So have a screenshot. I think I made this on Canva. You can make it on the free version. You can buy the premium. Pro is actually really good. I have it. But it's really not that hard to create little advantages for yourself, because trading in general is really hard. And the best thing you can do is somehow figure out how to make trading easier for me, whether it's having a cheat sheet, having time to set up 1 hour in advance, maybe ensuring that after a certain number of losses you stop because you want to preserve mental capital, whether it's avoiding this ticker whatsoever because absolutely not, I have no confidence in this specific stock. The options on it are really volatile. I never do well. Just stay away from it. So the cheat sheet is part of the same framework. It's going to help me make decisions fast. And again, they're all the different types of trades that I normally take anyways. The reversal is a trade that I've had a kind of like a toxic relationship with, but now I know that it's improved because I don't have to just short everything that moves up. I don't have to buy every falling knife or catch every falling knife. I can basically see that, hey, look, this is going up. Wait for it to come down. Maybe the 5-minute will cross the 5-minute 20 moving average. Maybe that's your entry, which is like, what is this equivalent to right here? Maybe take the trade right here. This is on the yesterday stock, yesterday's price action right here. Maybe take that. So allowing me to make better decisions while trading, because if you're going to be trading any type of chart, you're going to affect your win rate. You're going to affect your R multiple, because not only will you lose more, but if you have slippage, if you are manually exiting, you're going to be later on your exits sometimes, unless you hold your winners longer. So by having clean charts as a reference in front of you, you're able to make better decisions. And if you don't remember what this chart is basically telling you, go back, take a little reference, have a printout, whatever works for you. And I found this has helped me immensely with taking good trades. So I hope you gained value from this video. Let me know if you have any questions. And if you'd like a copy of this, I'd be happy to send it to you. I think the more helpful I can be to you, let me know. So just let me know in the comments below, hey, look, send me a copy of this and I'm happy to share it over. But I think what would be better is for you to create a copy for yourself. Again, it's not mentioned, but I think I should mention it. I took screenshots of all my trades. I record my trades. If you don't do that, you won't have these assets available to you. So if you want to make it yourself, get into the habit of documenting your trading history, documenting your trading journey. Document things so that you can study them later vigorously so that you can improve. And as you improve, you'll be happy that you started documenting in the first place. That was probably one of the single greatest advantages that I placed in myself, or single greatest decisions that I've made in my trading career, was to document my trading. And if I didn't document my trading, I don't think I would have ever fixed my problems. And I had problems just like everybody else. And I had a time frame that I wanted to succeed in it. And usually your time frame is always shorter than what actually happens. So if you document it, you'll have available assets for you to make it into a screenshot, or just take a screen recording and take screenshots later so you don't have to do it. I can basically just go, what is it, Command-Shift-4, Command-Shift-5 on a Mac and take a screenshot within seconds. So if you gain value from this video, make sure you let me know in the comments below. And if you'd like a copy, again, just let me know. But again, making your own copy is usually better, especially because then you can tag those trades the way your setups are. Thanks for watching.